IPO market. So let's welcome on board Rahul Shah, CFO at DOMS, joining in on the show right now. It's listed definitely at a premium. Rahul, hi, good morning. Good to have you on the show and congratulations once again. Strong growth record and high margin profile. I guess that's been leading to your subscription numbers as well and the listing pop. Will the company continue to grow at this pace? That's what the market wants to know now. And will margins continue to remain higher?
Thank you so much. First of all, thank you for having us here again. Firstly, we would like to, welcome the new shareholders to the DOMS family. Our family today seems to grow almost double in size from what we were earlier. Uh, just to answer your question, if you see historically over the last 10 years, we've tried to maintain a CAGR of about 20%. We've achieved that. Going forward also, we would like to continue, having that sort of a growth. The first half numbers you've seen probably did about 760 crores in top line. By the year end FY24, we look to achieve about a 25% growth in our top line. So yes, the market is good. We believe there's humongous opportunity which is available in the Indian stationery and art material segment. And with the brand that we have, with the product, with the enhancement of capacity, our distribution network, we would like to leverage this and continue this momentum both in terms of revenue growth as well as in our margins.
Right. Okay. Interesting then. So this 1500 crore rupee revenue you're saying looks easily achievable for FY24, and can you then cross that 2000 crore rupee revenue mark in FY25? Because that would imply a 33% revenue jump for FY25.
So like I said, first half was good. We did about 760 crores in sales. The momentum continues. So 25% growth from here, from FY23 in terms of revenue seems achievable. Plus, we continue to invest a lot in building our capacities. Within our current infrastructure, we are adding capacities for writing instrument as a new category and enhancing capacities in our existing product categories. And then this entire new 44-acre project that we, raising money in the company for, will start falling in place by March 2026. This entire project would be completed. And with these capacities coming in, I'm sure, revenue will, probably continue growing as we'll have more products to supply to the market.
Now, given that in the first half, just as per the RHP, the EBITDA margins were almost 17%, which is higher than most of your domestic peers. So what's the outlook in terms of your margin profile for both pencils and mathematical instruments? And what is it that we can expect when it comes to your margin drivers ahead?
Well, across our product categories, you'll find, our EBITDA margins are constant, close to that 15-16%. That's where we like to be. We'll want to continue this, margin profile and focus more on increasing our revenues because, the factors I mentioned and the market potential. I think the need of R would be to enhance the revenue while at the same time maintaining this margin profile.
All right. So is there any further scope then of margin expansion, or you're saying you'll maintain your margins at the current level even over the coming years?
So we'll first want to focus on growth in terms of top line. And I'm sure margins will take care of themselves, with, a lot of operating efficiencies coming in. Margins should take care of itself. But, we follow our mantra, nothing at the cost of market and then nothing at the cost of margin. So we'll balance both together.
And what about your export outlook? I understand that you export to more than 40 countries. What is the contribution to your overall top line, and how do you see your export component growing?
So exports today contribute close to 20% to our total sales. We get benefited from our relationship with Fila, who's our corporate promoter. They are a company, which is globally present in across 150 countries. So the opportunity to sell to Fila Group is humongous. At the same time, DOMS is doing very well in certain countries, the neighboring countries, African countries, Middle East. So we'll do that. But at the same time, domestic market demands are also very high. So we'll want to, with the new capacities coming in, have a balanced approach where, we continue to serve the requirements of the domestic market, strengthen the DOMS brand, and at the same time continue with the export being close to around that 20% mark.
The other thing I also wanted to talk about is that competition also has increased, right, in the organized space, especially in the stationery segment. Would that in the years to come also mean higher marketing spends?
So if you look historically, our marketing trends, have been less than about 0.5%. We truly believe, our product are our real heroes. So, we invest a lot in the product. When it comes to, the differentiating factors for DOMS, our product, are completely backward integrated manufacturing processes. We make almost 99% of our sales. The products are made in-house at our facilities across the product lines. We are backward integrated. So that helps us differentiating our products, plus our focus on R&D. As a result of these factors, we've sort of become trendsetters in the market where we're trying to give good product at a right value to our consumers. So that's helped us a lot when we compare ourselves to some of our peers.
Okay. Good to have you on board and wishing you all the very best. It's been a bumper listing and hope it'll be a bumper next few
So
years
much.
for the
Thank
company.
you so much. Really
All